On now to Jim Paulson of Wells Capital Management, joining us from Minneapolis, Minnesota, to give us his view of the markets and what happens next year. Jim Paulson, a pleasure. What do you mean by describing the gear year as 2012? What is a gear year?
Well, I've been writing for a while, Pim, about how this recovery is rolling out very similar to the last two, the early 90s and early 2000. For the last 25 years now. This is the third recovery in a row that during the first couple, 3 years was very disappointing to most. And then we hit year three and it geared. Gear year is not about rapid supercharged economic growth. What the gear year is about is a change in attitude, which comes to finally agree that the economy is finally in a sustainable recovery. And in the early 90s, in the early 2000s, and so far in this recovery, there's been a chronic and constant debate about how vulnerable this recovery is. I think 2012 will be the gear year where we decide the recovery is sustainable, and that will bring about a big boost in confidence. The primary reason I think that is that confidence has a lot to do with jobs, and the missing ingredient we've had so far is the inability to bring down the unemployment rate. I think that's going to happen next year. We created about 100,000 private payroll jobs a month in 2010. We created 155,000 private payroll jobs this year through the first 11 months. I think next year we're going to create around 200,000 plus a month. The magic is, as you go from 150 to 200, somewhere in there, the unemployment rate starts to come down. If it does, confidence will build, the housing industry will probably do better, maybe the $2 trillion on corporate balance sheets being held in reserve because of the fears will start to come off into productive economic events. And I think we're just going to see a year where confidence throughout the economy is better. We might grow no more than around 3%, but there'll just be a better feel that we're finally in a sustainable recovery and we're finally leaving the '08 crisis behind us.
Jim Paulson, if indeed that confidence does return, does that mean that investors right now should be looking at sectors such as the housing industry to invest their money?
Well, I don't know about the housing industry. I think economically that'll do well, Pim. The biggest thing I think we're selling at 12 or 12 and a half times this month-end earnings of $100 a share on the S&P 500, predominantly because 2011 was a year where fears trumped fundamentals. I think next year is a year where fundamentals start to overtake fears, and if it does, I think the multiple will no longer be 12 times earnings in a 2% 10-year Treasury world. You could get 2 multiple points higher, let's say, simply because people feel better about the sustainability of this market. That's 200 points on the S&P 500 just from a change in attitude alone. I think if we get that boost in confidence, I would look at the more cyclical areas of the marketplace. My favorites at the moment are emerging markets, industrials, or the manufacturing stocks in this country. And I think it wouldn't hurt to take a little swing at the financials. I realize they've been disappointing forever. They have been to me too. But in a year where confidence finally returns, I think that could do wonders for the financial industry.
We're continuing our conversation with Jim Paulson of Wells Capital Management. He joins us from Minneapolis, Minnesota. All right, Jim Paulson, what's the actual correlation between unemployment claims and the progress of the stock market? Is there a direct link?
Well, they've been really closely correlated, Pim, since 2000. Now, all throughout history, they've been fairly correlated, but boy, they've been really close since 2000. And claims went up earlier this year, and that eventually led to a collapse in the stock market there in the summer. But the good news is for investors heading into year-end is claims have gone on to fall below 400,000 now, their lowest levels since the recovery began, and they also surpassed the lows they reached, let's say, in February of this year. I personally think it's just one sign of many, but it's a very favorable sign that unemployment claims fallen below where they've been earlier, suggests maybe the stock market eventually is going to move to new highs for this recovery cycle. If anything, the improvement in claims suggests the job market's getting better than people thought, and I think more than anything, that's the most important ingredient to develop confidence, which ultimately could lead to higher market values.
Jim Paulson, indeed, if there are jobs to be had, what about wages? It's one thing to have a job, it's another thing to earn enough money to actually pay for the things you need. What are your outlook for wages?
Well, I think wages are bottoming around 2%. I don't look for them to go up a lot this next year, Pim, but the biggest thing is what killed the consumer in 2011 was that the consumer price inflation rate went from 1% at the end of 2010 to almost 4% year on year just a couple months ago. And that 3% increase in consumer prices relative to only about 2% wage growth meant that real incomes came down. When you look ahead into 2012, given what's happened to commodity prices and energy prices, it's a good bet that consumer price inflation is going to decelerate probably back towards about 2%, maybe a little less. And that means that that same wage growth, maybe a little better, will get into positive growth in real incomes for next year. So I don't think we're going to see a big boost in wage growth, but we're going to see maybe a deceleration in what you buy with wages, which will still allow those wages to stretch further in 2012.
Jim Paulson, crude oil, $101 for a barrel of crude today. What about energy independence in the United States? And I speak mainly of oil shale and oil shale gas coming from the Midwest, places like North Dakota. How will that change the economy?
Well, I think you're starting to see it. We're a net exporter of energy there for the first time here in recent months, and that has a lot to do with the Balkan region up in North Dakota. I think that we got a long ways to go, and we still have to push on alternatives like natural gas and others to really get true energy independence. But I think we're seeing some good signs of getting down the line in developing more of our own supply here, Pim. Energy has been a huge problem for us in this recovery. It was a big part of the collapse in 2008. It caused the slowdown this year was because energy prices went up so much in the first part of the year. So if we can keep crude oil $100 or below next year, that would be a big boon to consumers. If that gets out of control again, then that's a wild card in the outlook.
Do you favor investing in energy companies?
I'm okay with it. I think they're not a bad deal. I just find other areas more attractive, particularly like the industrials and even the materials companies. Those commodity prices, while crude oil's gone back up to $100, most commodity producers like copper and steel and aluminum have really come down a lot. So I think there's cheaper resource plays right now than the energy complex.
All right, I want to thank you very much. Jim Paulson joining us from Wells Capital Management, giving us his outlook for 2012.